It's Wednesday, August 25th, 2021. Before I start this video, I want to remind everybody to please share this video. Make sure you give this video a thumbs up and make sure that you are subscribed to this channel. Also, I just uploaded a brand new video on Patreon last night, so please come over and check that out. I will also be uploading another video on Patreon in the next couple days, so please come over, check out the Patreon channel. But without further ado, let's get into what's happening today. I want to share a few articles with you. This first one coming from wolfstreet.com hits home, and I think a lot of you are going to be able to relate to it. But this article hits home, and I'm going to tell you why here in a minute. It's titled, "How Far the Value of 4 Live Malls, Not Zombie Malls, Collapsed This Summer." And I want to share this with you because one of the malls on this list of the 4 is a mall 5 minutes from my house. It's the Palm Desert Westfield Mall. And I just drove by it today, read this article earlier, and it just really made me think, how many people really know what's going on? And I'm going to paraphrase through this article, share it with you, and many of you will be able to relate to it because this is happening to your local malls. And this is all tied into the commercial mortgage-backed securities, into banking, into the stock market. And as commercial real estate is collapsing, as malls are collapsing, what is going to happen to all this commercial mortgage-backed securities? What's going to happen to the banks, the financial institutions, the retail investors that are invested in these commercial mortgage-backed securities? It's a mess. And I think that real big trouble is coming, leaving big holes in commercial mortgage-backed securities as mega landlords such as Brookfield and Westfield's owners walk away. Here are 4 big malls that are open and doing business and that have defaulted on their debts and whose values have been slashed over the past couple months as lenders brace for impact. Now remember, you have retail investors investing in commercial mortgage-backed securities. Big banks like JP Morgan, Deutsche Bank have huge portfolios of commercial mortgage-backed securities. And again, the question is, what is going to happen to the investors and to the banks as all this is collapsing? Let's talk about a mall here that I've filmed multiple times, probably 2, maybe 3 times. I filmed at the Palm Desert Westfield Mall probably a couple years ago because I noticed so many vacancies, and I saw the crisis that we started seeing in retail. And so this mall has been on the radar for quite a while. This mall is 1 million square feet. It's owned by European commercial property giant Unibail Rodamco Westfield, which is buckling right now. Get this, buckling under its $32 billion of debt. They said in February they're getting rid of all U.S. malls. So next question is, if that mall closes, where's the tax revenue come from? What do those people do for work? And let's also remember that these malls support so much local business that surrounds those malls. Again, if this mall goes, this is going to have a huge catastrophic effect on the local economy where I'm at. If your mall closes, the local restaurants that surround it, the small businesses that surround it, and of course the businesses in the mall and the people employed by these businesses in the mall are all going to get wiped out. A 575,000 square foot portion of the mall, not including anchor stores, serves as collateral for a $125 million loan that was securitized in 2014 in commercial mortgage-backed securities. To sell these commercial mortgage-backed securities to investors, the portion of the mall was appraised at $212 million. Investors felt secure by this conservative structure. What could go wrong with lending $125 million on $212 million worth of collateral? Well, what really went wrong here was the economy began to fold years ago, and brick and mortar began to have a crisis competing against e-commerce and Amazon, and then a health crisis. But really at the end of the day, this is all boiling down to the economy. The economy was in bad shape before the health crisis. Things in retail, we remember the retail apocalypse that began a few years ago. This affected the malls. We can't blame it all on Amazon. We can't blame it all on e-commerce. But what we better start blaming it on is this economy. This economy has been collapsing year after year after year. The Sears in this mall closed, I think, back in 2019, and it remains empty to this day. The lenders will be stuck with the collateral while landlords either walk away or file bankruptcy. The loss of value is measured from the time the mall loan securitized into commercial mortgage-backed securities until the most recent haircut. So this mall, the JCPenney's filed bankruptcy in 2020, Sears closed in 2019, and any vacant, empty anchor store is deadly for a mall. This mall presently probably has about 20 to 25% vacancy, again, with a bankrupt JCPenney's as an anchor store, and Sears now gone, the other anchor store. It does have a Macy's, and we know that a lot of Macy's have closed and more will be closing. In May 2020, Unibail, Rodamco, Westfield defaulted on the loan payment. In June 2020, the $125 million loan was transferred to special servicing for payment default. Unibail, Rodamco, Westfield have already given back several Westfield malls to the lenders. And I wonder how many people that work at this mall, how many people that drive by, who visit the mall, even know that this thing is done. It's over. And this is how oblivious people are. Unless you are actually doing a little due diligence, unless you really, really care to investigate things, you know, people are walking around this mall thinking everything's okay, even though 25% of the stores are gone, the Sears is gone, but they have no idea that the mall has completely defaulted. How many of the stores in the mall are even paying rent at this point? Many of them may, if they even know what's happened, may not even be paying rent. So this is a ticking time bomb. It's on borrowed time. It's really, really sad. And this thing's been around, this mall has been around for decades. The lenders are going to take big losses, ladies and gentlemen. The collateral value in 2014 was $212 billion. The property was appraised this August for $55.2 billion. This is a 74% haircut. The article goes on to say this: if the mall could be sold for $55 million before charges and fees, lenders having lent $125 million against $212 million in collateral would pocket a loss of 56%. And we look at commercial mortgage-backed securities, and you look at what JP Morgan is holding in commercial mortgage-backed securities, $2.7 billion. Deutsche Bank is holding $3.8 billion of commercial mortgage-backed securities. Wells Fargo holding $3.1 billion. Goldman Sachs, $3.8 billion. And I don't know what the number is in regards to the retail investors. Retail investors buy commercial mortgage-backed securities. This is a ticking time bomb. When you look at what's happening to office buildings, retail buildings, and these massive malls, this is going to be an awful nightmare. And what are these big banks going to do? What's the average retail investor going to do? These are horrific losses. I don't hear anything on Fox Business. I don't hear anything on CNBC. All I hear is how great things are doing. But how come we're looking at these massive retail and commercial losses and nobody's talking about it? I want to go on to another article today that's also very concerning. The July new home sales. And we are beginning, I think, to see things turn in housing. And in this article on The Hedge, U.S. new home prices hit record high. Sales hover near 14-month low. Here's the July numbers. Things were down in the Northeast, 24.1% for new home in regards to new home sales. Midwest down 20.2%. In the South, they were up 1.2%, and on the West, up 14.4%. Year over year, new home sales are down 27.2%. When I read this, I am beginning to realize that I think we're turning a corner here, that we're beginning to see a correction in the real estate market. And I believe that a lot of people are going to regret their decision to buy a home. And these people who had thought that they were going to just be priced out, that there was never going to be a home for them to buy, they bought into this feeding frenzy. I think a lot of these people are going to regret that they bought a home and that they didn't wait. Now, I'm going to hopefully get out to Kentucky in October to look at some ranches. I'm looking at ranches in Kentucky now. Prices seem very, very good. I wouldn't do anything right now, but I'm looking at maybe purchasing something this coming spring, this coming summer in 2022. Right now, I'm keeping my powder dry. There is no way I would pull the trigger on anything right now. There's too much uncertainty. There's just too much unknown going on right now. Everything that's happening politically, things that are happening globally, this thing happening in Afghanistan, we don't know what the fallout's going to be. And I think we are now just beginning to turn a corner in real estate. But I am looking at Kentucky. Please comment down below if you are in Kentucky. Let me know your thoughts on the state of Kentucky, what areas you like. I want to go rural, 20, 25, 30 acres with a pond. And I know Kentucky has a lot of water. And I'm looking for a property where I can really, really be self-sufficient. So if you're in Kentucky, let me know your thoughts on the state of Kentucky. I would really, really appreciate that. But again, I'm not doing anything right now. I'm going to be looking at 2022 because I think that we're going to really see things begin to implode in real estate and with this economy in 2022. I do want to share with you today, I did buy more precious metals. Again, uncertainty, uncertainty, uncertainty. And this $3.5 trillion budget bill, the $1.2 trillion infrastructure bill, all this. I mean, we're literally talking near $5 trillion that is going to be printed out of thin air, ladies and gentlemen. So I had to buy more metal today. Many of you, I'm reading in the comments, are doing the same thing. People ask me for my recommendation. SD Bullion, I have a link down below. I don't care where you buy it from. Just buy it from somebody reputable. I bought from SD Bullion today, and I'm going to continue to back up the truck and buy more precious metals as I continue to see more uncertainty. Look, we are seeing uncertainty throughout the world now. We're seeing uncertainty politically, socially, and financially. And so to me, there's never been a time where it's been more important to be buying precious metals. So I'm going to continue to back up the truck and buy more precious metals. SD Bullion, link down below, check it out. I want to share another article with you, and this just reinforces with you and with myself these continued supply chain disruptions and that they're going to get worse. Our vice president just said a few days ago, the stories we are now hearing about the caution that if you want to have Christmas toys for your children, you might want to start buying them like right now, because the delay may be many, many months. Now, what does she know that the average American doesn't know? Well, you know and I know that these delays and that these disruptions are going to get worse. And this is why you better have food, you better have water, why you might want to put some vitamins or some extra pharmaceuticals away, why you better be preparing right now, because these supply chain breakdowns are going to get much worse. These disruptions are going to get much worse. As I make this video, there are 37 container ships right off the west coast here of Long Beach. They can't get enough trucks to get these things out of the terminals. And this is going to be a real mess, ladies and gentlemen. Here's another article I was reading today. The shortages are going to get worse later this year as global supply chains increasingly falter. There's not enough port workers to unload the ships. It can now take months for products in China to get to the US retailers that ordered these products. And I thought this was interesting. It's too late to save Christmas. Expect weeks of delays from toys to computers. Ships are bottlenecked. We have a container shortage. They can't even make these containers fast enough. And again, we have a supply disruption unlike we've ever seen in the history, in world history. And it's going to get worse. And when you add inflation to this disaster, it is going to be a complete nightmare. But it is too late to save Christmas. If you watched my video from a few days ago at Walmart, the shelves are empty. People have been writing me, thank you so much, and sharing with me their experiences at retailers, at the stores, at their Walmarts, and the shelves that they're seeing absolutely emptied. And if it's this empty right now, what is it going to look like a couple months as we're building into Christmas? And who's going to have a job in a couple months? We'll get the job numbers tomorrow. First time jobless claims for last week will come out tomorrow. But inflation is starting to get out of control. Unemployment is out of control. Wage cuts out of control. And now we are going to see shortages on the shelves that are beginning to really show themselves now. And again, people said this could never happen in America. The shelves will always be full. We could never be Venezuela. We could never have inflation. It's all beginning to happen, ladies and gentlemen. And if you're not prepared to deal with this storm, you're going to be in very, very big trouble. Here's another article in The Hedge today. Peak retail season. Let the chaos commence. Again, this is, look, take this as a warning to what's coming. Buy what you can buy right now. You can still buy most products that you need. You're going to pay more, you're going to get less, but you can still get them. They may be harder to find, but get them now. Mid-August, Long Beach and Los Angeles ports were at all-time highs with 37 container ships sitting off the coast. They will handle 950,000 TEUs. That's 20-foot equivalent units. 950,000 20-foot units just this month. 90% of vessels in August are just sitting and waiting to be unloaded. And remember, most of these ships are returning to Asia empty. All they're taking back is US dollars, which they will use to come to America and buy farms, buy ranches, and buy resorts, and buy real estate, and spend them while they still have purchasing power. And of course, China will continue to buy massive amounts of gold. And this is what I'm going to continue to do. I'm going to continue to do what China's doing. I'm going to continue to buy gold. I'm going to continue to prepare for the wealth transfer. And unfortunately, I don't see this country waking up. And if it doesn't wake up soon, China is going to be the world's superpower, and they are beginning to really flex their muscles. And China knows, as well as you know, and as well as I know, gold is going to be king. Gold is going to be the real money. And more than likely, if America doesn't do it, which it looks like it's not going to do, China is going to back their currency with gold. And somebody wrote to me today, well, who would go to a gold-backed yuan currency? Most of the world would do it at this point because America has abused the world reserve currency, the US dollar. It's abused it by starting wars over decades and decades, destroying countries, starting wars, killing people. And China is going around the world doing business. China is going to go around and cut deals as they've been doing. And America tried to do it with wars. China's going to do it economically. And I unfortunately believe that they're going to succeed. And to finish what they started, to be the world superpower, to be the dominant superpower, to have the dominant world reserve currency, all they have to do is back it with gold. And the world will run to the yuan. It will drop the dollar. The world just needs an excuse now to get rid of the dollar. The world knows that America is fading. We're not producing. We're not making anything. We're not innovating. And our US dollar, since we got off the gold standard, has lost 97% of its purchasing power. And we all have to realize that when that day comes and we lose our world reserve status, your life and my life is going to change immensely. And if you're not holding real money during this wealth transfer, this world wealth transfer, you are going to be a peasant. You will be a slave. The only people that are going to survive are the people who have real assets. And that's just the unfortunate truth, ladies and gentlemen. This isn't to scare you. This isn't to shock you. This isn't about doom and gloom. This is about reality. And if you're not getting ready right now, and if you don't see the warning signs right now, if you don't see the canary in the coal mine, I feel sorry for you. And I feel more sorry for your kids. This is going to get really, really ugly. But we are going to see the world change here. It's changing right now. I was out today and just looking around going, something's not right. This doesn't look normal. You know this isn't normal. I know this isn't normal. You need to be protecting yourself mentally, physically, spiritually, and financially. Have an incredible evening. God bless you all. Thanks for watching. And just think about what I'm saying. Start thinking outside of the box. Start getting out of the system. Protect what wealth you have right now. Paper is not going to protect you. Real assets are. Start looking at gold. Start looking at silver. This isn't financial advice. This is what I'm doing, and this is what China's doing, and this is what your central banks are doing. Real money is never going to go away. Paper will. Protect yourselves, ladies and gentlemen. God bless.